Hello active traders, and welcome to our Trading Week Ahead broadcast. I'm Ken Calhoun, your host, coming at you live here on Saturday, May 26, 2018. Wanted to wish you and yours the best for a happy, peaceful, thoughtful Memorial Day. I live here in a military town, so it's a special, significant holiday weekend for all of us here in town. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold. And by watching, you agree not to make actual trades. Instead, learn in a safe learning environment with a demo account or paper trading account until you get the hang of this, because it takes a lot longer than you might think. So if your trading losses ever make you or your family say, "What the heck? Stop the madness." Instead, your goal is to make as much money as you can. My goal is to help get you there sooner rather than later. Faster rather than slower. I want to start off by acknowledging salute to our traders of the week, Thomas C. from our Swing Scans Premium Alert Service live webinars. He had a good comment last Saturday, so thanks Thomas for that. And from our Trading Open live room, one of our newer members, Louise, had a good contribution. As usual, she's really smart. She likes to post really intelligent questions, which I appreciate, Louise. So on behalf of all of us here at Trade Mastery, thanks for our Trading Open participation. Our quote of the week from John McHugh: "As America celebrates Memorial Day, we pay tribute to those who have given their lives in our nation's wars, and certainly we appreciate the sacrifice and the service of our men and women in uniform." So a moment of prayer for all of those who have lost their lives in service of defending our great nation as we celebrate Memorial Day here in the U.S. I know many of you are here from other countries. This weekend, that's why the stock market's closed Monday, by the way. So don't trade Monday. It's going to be really quiet because they're not trading Monday. The markets are closed in remembrance of Memorial Day. So our coaching tip of the week before we hit our charts is to avoid false breakouts. And one of the things that, it's a popular topic. I've spent my life with thousands of real money trades trying to figure out how to avoid false breakouts. One of the quick tips is to use, and you may have seen this in Stocks and Commodities, my articles, is to use a safety buffer. So for example, in swing trading, I like to wait till 30 to 50 cents above the nearest whole number high, or other breakout filters. So you never buy the obvious resistance area, because often, how many of you ever had this experience? You get into the trade, it goes up, it breaks resistance, so it makes sense to trade, right? Well, not so fast, because oftentimes you get into the trade, it goes down against you, you get stopped out, and then it runs up without you, and it's really frustrating. So to learn how to do things differently, you may want to consider my alert services, in which I build in false breakout safety buffers, whether it's at swingscans.com or tradingopen.com or my other alert services. So I'm a Money Show speaker. Let's go ahead and get on with it. Our S&P has been quiet. You can see we've been in a congestion box right over. This is the S&P 90-day daily candlestick chart, for those of you who are new. The S&P has been going nowhere the last 2 or 3 weeks, right? It's been going sideways, right perched over this 100 simple moving average line. Our support and resistance triggers are therefore identical to what they were last week. We have 2752 is the R1 trigger, so I don't want to go aggressively long, at least in my own capital accounts, until we break over 2752. Again, that is a false breakout filter right above this candle shadow high. So we don't want to go long at 2750. That would be too easy. It'll likely run up a little and pull back down. So I want to wait instead for it to get over 2752 before I go aggressively long or scale into my existing long positions in my capital trading accounts. The S1 level is 2694, and that's a carryover from last week. I think that's a intelligent place to wait to go short the market and collapse any open long positions if the stock market loses 2694. And the reason for that is it's right under the 2700 level. We don't want to short at that level because that's likely to attract some disagreement between buyers and sellers. So we want to wait instead for momentum to kick in. 2694 is going to be our S1 or short trigger for the stock market moving forward. Now let's take a look at some outstanding charts. One that I feature for my small cap scans members is this ARQL. This is a cheap stock under $10, but look at the volatility. This guy's gone from 2.5 all the way up to 5. So for those of you who trade the inexpensive stocks, you may want to try small cap scans, and this is one of our members' picks. These are the kind of charts I like, with lots of large green candles with this spectacular uptrend. If we look at the 15-day chart, look at that. It's what I call a schwang chart. It's what I call an acceleration ramp. It had a steady uptrend, then it hockey sticks into a sharper angle, 45-degree angle breakout. So if you do trade cheap charts, the trick is, or the punchline is, you have to trade charts with consistency and not the pop and drop one-hit wonders that stop you out all the time. So anyway, that's a really good chart to keep on the radar for the upcoming week ahead. Next up to bat, one of our swing scans picks, GDS. You can see it's ran up nicely despite having a bearish engulfing here. The bulls still took charge and lifted this guy all the way from a base of around 26 up to 42. So it's got a really big run with a lot of large green candles. Always be on the lookout for what I call signal candles, or large green momentum candles on high volume, and that tells you buyers are in town. So whenever you see that, use that as kind of a lead indicator. That's also, my techniques are specifically designed to help people avoid false breakouts, because we're buying into strength and emerging new proven strength, not speculative strength. We want institutional buying pressure to come into an instrument, and so for that reason I like looking for large green candles on high volume like this guy is, right? That was like a month high volume on that particular day right here. Not a gap, but it was a big green candle, and after that candle that peaked at around 36, it ran up another 6 whole points, closing off yesterday just under 42. So that is GDS. Again, we don't speculate as to the reason why it ran up. All we care about is how do we make a successful trade decision up at new highs, and what makes sense to avoid a false breakout. So that's a good chart. Another one that we mentioned for our members for a intraday chart was CTRP, CTRP. And here is an example of a new feature we've got for all of you on the home page at trademastery.com. We've got both a winning day trade as well as a winning swing trade alert, and just how well it worked out. And you can see the characteristics of this. Back when it was here, I said for our live room members, they were thrilled because this guy ran up a point after I said to go long, right? Boom, flawless victory. He shoots, he scores, the crowd goes wild. Go Ken, it's your birthday. Anyway, it's a good big breakout. We like charts like this that have nice multi-point runs. They've got a large volume of at least 15,000. This guy had over 100,000 shares per minute volume. Discernible pattern, a gap continuation is what I've taught traders since 1999. And that was the long trigger, designed to avoid a false breakout, which I would have estimated to be, if it's going to screw us, it's going to do it right here, right at the dumb money public area, right where the previous resistance was. Now in this case it kept running up, but oftentimes they'll run up a little bit just to sucker in the newbies and then collapse. And then it runs up without you. This guy just ran up out of the gate, so we got on board at 46.60 and it ran all the way up to 46.80. So that's a day trading winner of the week. CTRP, also worthy of consideration for next week to keep on the radar as well, because the directional volatility of this guy. The other winner of the week to feature is from our swing scans alerts. This was back on May the 12th. I told everyone to go long if this guy gets over 1730, and it ran all the way up to 18.5. So a nice big momentum run in this guy as well. It's doing a bullish cup, and I think it continues on up as we speak. So that's a new feature on the Trade Mastery homepage, is winners of the week charts. So do come back. I try and update these at the end of each week. So at the end of every Thursday or Friday, you should see a new 1 or 2 charts here to learn from. So that's a new feature by popular demand. What else do we have going on? Oil has been weak, so I'm going to close out my oil trades if we continue on down. Friday was especially bad for oil. You can see USO, UCO, all the rest of it. A big drop on Friday. Yesterday we had a big drop in oil. So oil is a bearish bias for the upcoming week ahead as well because of this. We'll see if we find support at the 50 SMA. I wouldn't hold my breath. It may well keep going down, so be careful with oil sector instruments. Gold isn't doing too much. If you look at, say, Nugget, Newmont, Barrick, nothing. So stand clear on gold. We close out open longs in oil or go short if it continues on down. You can give preference to good volatile charts that have good sustainable momentum. What else do we have? The benefit of our Forex traders out there. The dollar CAD is the strongest chart. Let me pull this up for you. I always like to cover the strongest chart out there in our currency, the wide world of Forex. And you can see this is the US dollar to the Canadian dollar, eh? And it's going up to just under the 130. So it's a pretty bullish breakout we saw recently. So if you're a Forex trader, the US dollar to the Canadian dollar, the only up chart, most of the other Forex charts are all way down in the gutter, down at the bottom. So, but the dollar CAD is a shining star. If you are a Forex trader, be sure to try www.forexvideos.com. That's the subscription service for Forex traders I run with my colleague Peter Bain from Forex Mentors. So anyway, forexvideos.com. And that's one of our featured picks for the upcoming week with a specific entry trigger for the dollar CAD for all the world's traders as well. All right. So that's kind of it for now. You got some especially strong charts to work with. The trick is trading the outlier charts, the ones that are doing well in spite of the stock market weakness. Right? The stock market's been going sideways. It's been a heck of a sideways market pretty much all spring long, right? It's been going sideways since March. They don't really, how to say, institutional traders aren't committing long or short as of yet in any large consensus. What we're seeing is outlier charts that are doing good in spite of the stock market. And those are hard to find. To be perfectly honest, I've had to work especially hard on behalf of my members to find especially strong charts in a sideways market. From a relative strength standpoint, what you've got to do as a trader, it's like they say, adversity demands action. And as a smart, active, thinking trader, what you've got to do is focus on charts that have good, especially strong breakout potential and evidence that price action breakouts are in play despite a quiet, sleepy market, right? So is it still worth trading today's markets? Absolutely, but you have to know exactly where to zero in. What are the charts that make sense to trade? And where are the trading opportunities most likely to make wins for you? How do you avoid choppy charts and all the rest of it? And I like to cover that for my members. So anyway, what do you guys think? Do you like the idea of the winner of the week? It had been a request for years. People have been asking me, can I throw up some charts from my different alert services on a regular basis? So I'm taking the extra effort to do that for you so you can see examples of the type of charts that my members get. And I'll also add ones from small cap scans and chart scans and Forex videos and my other, I've got 5 alert services going now. So as the company continues to expand to meet the world's traders' needs out there, really want to stay on target with good professional entry and exit strategies that make sense. Let's do some interactive coaching activity while we're here. Let's say you're considering GDS. Where would be a entry trigger? Where would you most likely enter this guy? Would you enter it right now? It's probably not a good idea. Where would you wait to get in long on this? Go ahead and type in your answer. Tell me what you think. Where would be a good long trigger for GDS? The earliest or a more conservative trigger? Every trader's different. Ask hundreds of traders and I'll get all these different answers. I've seen 43.30, 42.60, 46.80, 43.07, 43.50, 43.50, 42.20. Thanks everybody for posting. All over the map, right? 41.80, 42.80, 43.30, 43.10, 43.4, 42.55, 42.5. Personally, because the shadow is here, a conservative trigger would be, say, 43.50. An aggressive trigger would be 42.8. The trade-off, and this is a good tip for I need to cover this in my YouTube videos, is avoiding false breakouts, as well as what I do for all my members and in my courses. The trade-off of entering right above resistance is you're going to have a higher incident rate of, you can call it, back in statistics, we'd call it alpha or beta errors. You may get in, it would be incorrectly forecasting an entry that's too soon, and so you're going to have more stop outs. But the benefit is there's more profit potential if you get in on an especially strong breakout sooner rather than later. I tend to prefer, the more experience I get, they say there's old traders, there's bold traders, but there's very few old bold traders, so I tend to be more conservative, and so I tend to wait for it a bit and then use a pilot or a small size trade under 100 shares, maybe as small as 20, 30, 40, 50 shares to get the party started, and then add to the trade or scale in if it keeps working out. So a conservative trigger would be up at 43.50 or so. The point is, it would not make sense to enter, let's zoom in on this guy. That's what I'm talking about. It would not make sense to enter, say, at 42.50. Somewhere over 42.50, you can, that's one thing so my tip is, that's one thing that you should test out, is the height of a safety buffer. What happens if we enter 42.80 versus 43.50? Which one would be more consistent in terms of a successful entry trigger? Let's say this guy, ARQL. For those of you who trade cheap stocks, where would you get in at ARQL? And there's no right or wrong answer. The market and your profitability, your P&L, your unrealized P&L, makes the case for the trade. Got a few minutes left here, but the point is, test out false breakout filters. Somewhere above the high makes sense. You don't want to trade at the high, at say 530. That would probably stall and drop off 540, maybe 550, and then drop and cause a stop out. So my tip, and I hope that these are helpful, a very genuine, sincere, from one trader to another, having had both good years and bad years and learned the difference between the two. One of the things that I found really helpful is to be patient and let price come to me. And the way I do that is with a buy stop limit order. So I'll put in a buy stop with a limit somewhere above the obvious resistance area, whether I'm trading in my Fidelity or my Ameritrade or my Interactive Brokers accounts or wherever I'm trading. I'm looking for a false breakout filter somewhere that's not at the, I won't call it the dumb money, but the public money would buy right at a breakout. I always used to do that for FOMO, fear of missing out on a big run. What I found out that you should be more afraid of is fear of false breakout, FOVB or something, right? Fear of false breakout. You get in at the obvious breakout, you get stopped out, it runs up without you, you try again, you get stopped out again, and you get into this spiral of doom as a trader. Stop that. What you want to do is use false breakout filters somewhere north of the obvious resistance area and test out. The answer to a lot of things in life is to test and experiment. Find out what works best for you on your terms in a way that makes sense for you personally. Also with your given, available time. Maybe you don't have as much time to be looking at the magnifying glass on the charts, so be in the ballpark. Where's a ballpark trigger? A lot of answers, 530, 550, 65, 45, all over the place. Oh, hey, Ernie, how you doing? 555, 550. Let's see, would I still buy after 12 up days? Of course, Lou, that's what I specialize in. Sure, we may get the inevitable pullback, but if we do so, it's likely to occur maybe Monday or Tuesday. We make it a pullback or a mean reversion even way back down here. I get that, but if you look at, for example, one of my recent favorites until lately was WLL, and look how many up days in a row it had. It had all these up days until it finally stalled out near 53, 54, and it had a bearish engulfing here. But look at all these up days. If I had stopped, say here, because it had been up 5 or 6 or 8 days in a row, would have missed out on the tail end of the bigger run, right? So it's a good trade until it's not, and you'll see the obvious evidence with either, often you'll find a candle pattern like a bearish engulfment or shooting star. For more, learn from Steve Nissen on how to use candles properly. I did. And also, look for staying the course. As long as the trade proves you right, you successfully trade it. As soon as it rolls over and stalls and starts to drop, you get out of town. So looking for the strongest charts like this is really important. Don't have a fear of buying a new high that then stalls and drops. Instead, have the fear of missing out on a big run that continues in context of a consistent chart that makes sense. So anyway, y'all have been great. I appreciate y'all being here, and I've got to wrap up. I've got swing scans coming up in just a few minutes for my swing scans members, and I hope that this adds value. I'm looking for you guys, you folks, ladies and gentlemen, gave me a lot of outstanding feedback. I had over 400 responses, which is a total of over 800 comments, because I had 2 write-in, and actually 3, so 1,200 comments. I had lots of comments, and I'm looking for ways to add even more value with good specific, topical, well-explained breakout patterns that make sense, and give you some insights in terms of how that all works out. So anyway, I'm Ken Calhoun, Day Trading University and Trade Master. I wanted to thank all of you for being here. So until next time, trade with passion, trade with itty-bitty stops, play the field, and let's go get them. You guys take care. I appreciate you being here, and I will see you next time. See you in a week. Trade smart out there. Remember, the markets are quiet, so I'm going to play it safe. So we're out of time, so I got to run. Swing Scans members, log into your Swing Scans webinar. Will be starting in just a few minutes, so we'll pick up with even better charts. We've got 14 charts to go through coming up in just a few minutes. So take care. Best wishes, and again, happy Memorial Day weekend. Good trading next week. Remember, capital markets are closed Monday, so take Monday off. They pick up on Tuesday. And I'll see you guys next time. Bye for now.